QuickBooks Online 2021 forward contract for speculation that foreign currency will weaken. Maturity transactions, QuickBooks cash transfer. Let's get into it with Intuit's QuickBooks Online 2021. Here we are in our QuickBooks Online multiple currencies problem 3 practice problem. In prior presentations, we set up a free 30-day trial so we could practice with the multiple currencies, then turned on the multiple currencies. Now we're continuing on with the practice problem. We'll do so by opening up the financial statements by going to the tab up top, right-clicking on it, duplicating that tab. Going to duplicate the duplication by right-clicking on the tab again, duplicating it once again. Then we're going to go down to the reports on the left-hand side so we can open up the P&L and then the balance sheet. So there's the profit and loss report. We'll do the date range change up top, bringing this from 01/01/20 to 12/31/20. We'll go ahead and run that report. Close up the hamburger, hold down Control, scroll up just a bit to get to that 125%. Then we're going to go to the tab to the left, go down to the reports on the left-hand side. Open up then the balance sheet report, the good old BS balance sheet report. Scrolling back up top, we'll do the date range change once again from 01/01/20 to 12/31/20. Run that report. Close up the hamburger, and this is what we have thus far. So we put this forward contract on the books. Receivable will be received in cash. The payable then, the item that is in the foreign currency. We then had an adjusting entry that we entered at the end of the time period to bring it up to the current rate for financial statement purposes as of 12/31. Now we're thinking about the time period where this is going to become due. And we looked at it in Excel. If we look at Excel over here, we saw that this is where we stood as of the end of the last time period. And this is our payable that is going to be something that we're going to pay in pesos. Then we did an adjustment to that payable down here. Now, we're not going to do that this time. We're going to skip down to the second transaction, which is going to be the transfer of the cash. And then we'll get into the reversing entry later. So you would think we would do the reversing entry first, but we're actually going to do the reversing entry a little bit later so we can kind of see how it'll fall out and why you need the reversing entry. So we're going to skip down to the second transaction here, which is the cash that we're going to need in foreign currency units so that we can then pay off the payable. So we're going to need the $3,850. So we're going to have to set up a cash account in foreign currency units, transfer some of our dollars in US dollars to the foreign currency units, picking up 5,000 in foreign currency units, 5,000 pesos in foreign currency units, which should be 3,850 in US dollar equivalent value. So let's do that. We're going to go back on over. Let's go to the first tab and we're going to go to the accounts down below into the accounting. I'm going to hold Control, scroll down just a bit. We're going to be adding another account, so it's going to be a bank account type of account, which will be holding then pesos. So we'll go to the new up top. We're going to set up a bank account. It's going to be a checking account, but it's going to be holding pesos. I'm going to change the currency from US dollars to the MNX, the Mexican peso. And then after the checking, I'm going to put in MXN, so we know that that account is representing a holding in Mexican pesos, although it will be reported on our books in US dollar equivalents. So I'm going to go ahead and save it and close it. And then we're going to transfer some money into to that account. So a couple ways we could do that. If I hit the plus button here, a couple forms that we could use, right? We could use an expense form, taking it out of the checking account, or a check form, taking it out of the checking account, putting it into the other account, or a deposit form that would be putting it into the checking account, into the new checking account and taking it out of the others. But the one we should probably use is a transfer because it's going from one checking account to another. So we'll use the good old transfer form here. And it's going to go from the US checking account. So I'll hit the drop down from the checking account in the US dollars to the checking account in the foreign currency Mexican peso. We then have the exchange rate. Now this is going to happen as of, when is it going to happen? 4/1 of the following year. So I'm going to say 04/01 and I'm going to say 21. Now, when I enter the date, it might not have the exchange rate because that's in the future as of now. But even if it had, so normally in the practice problem, this would actually be the correct exchange rate at this point in time because it would be the spot rate because we're actually trading or transferring money at this point in time, meaning we're getting 5,000 pesos at this point in time. That would be using the current rate. the current spot rate, not the forward rate. In our practice problem, that spot rate is 0.77. That's not the actual spot rate. It's just a practice problem spot rate so we can get an idea of it. So it's 0.77, 0.77 just for this transaction, we're going to say. And there we have it. So that should be the transfer. And then let's put the amount here. We're going to put the amount in pesos, 5,000. And this should then revalue those pesos to the current value equivalent by taking that 5,000, multiplying it times the 0.77, reducing the checking account by that amount, and increasing the other checking account in pesos by that amount. So let's go ahead and save it and close it, and then we'll check it out. Saving, closing, checking out by going to the tab to the right, scrolling up top. We're going to run that report, and then we see that I have to do it as of the next year. Let's run this report, changing the date to 2021, and then run it. There we go. That looks more right. That looks more righter. So then we're going to go to the 3850. If I go into that, then there's going to be our transaction. So remember, we put 5,000 in it, and then the system converted it to the US equivalent. So that 3,850, although this says checking account MXN, does not mean that we're holding 3,850 in Mexican pesos. It means that we're holding equivalent units in US dollars, because we have to measure this financial statement in US dollars, and we're actually holding on to the 5,000 in actual pesos. That lines up to what we have in our Excel worksheet here. So that looks good so far. If I go back on over, then in the checking account, we brought the checking account down by that 96,150 because we actually spent $3,850 in order to get 5,000 pesos, which is valued at 3,850 pesos. That's what we have thus far, and notice no impact on the profit and loss from that transaction. We'll go ahead and then take a look at the trial balance. Let's hit the drop down, go on down to the reports, and type in the trusty trial balance, a good old TB trial balance. Date range change, I'll put it for the second year this time. This is going to be from 0101 to, hold on a second, 010121 to 123121. Run it. Closing the hamburger, holding control, scrolling up just a bit. This is where we stand at this point. It's not going to tie into the Excel worksheet at this time until we get through these next couple transactions. So I'll print these out so you can check your work with them if you so choose.